Okay, quick look through Tuesday's end of day closing screens. Felt like a little bit more blood on the streets today, didn't it? It was there's a little bit of puke action starting to come into some of the better stocks, which is a good thing, to be honest. So I've shared this public tonight. There's not gonna be much in the screens, but just gonna go through the motions as we always do. I've been pretty sort of fired up about a pullback, even though you feel it in your own portfolio. It's just nice to get a good washout of a portfolio health check, is what we call it. The markets basically wash out the stocks what aren't working, and the ones what are working, they expose themselves, and it's really easy to find them on in a correction. So first things first, I'm just gonna something I created for ShareScope was the volume conviction, and it's available on SharePad as well. It was coded for me as a script actually, because I use ShareScope Pro, but it's available in SharePad as well now, and I'm just going to basically highlight this because days like today it's really useful on the markets, and I'd recommend a 10-minute chart, but it doesn't matter what time frame you put it on. It kind of nails it today. It's been low volume all day today, and on a day like today where stocks are really puking, but the markets have just been on low volume, and we just drifted into the afternoon session, and then we got the first upstick on volume here, volume conviction, and then the second stick here, what we call a swing point at and then it just coiled back in, back tested the swing point. I gave it a bit of a heads up in chat, and then off it went on its journey, and it's from that swing point it's gone. The S&P, that's a huge move, plus 1.5% so far, and we're working on an outside, an offside day, I call it, where you take the opening range lows out and then you take the opening range highs out. If it closed up there, well, that would be even better. In the hands of the gods, isn't it? But just something, this line in the sand here, this opening range high, today's high, is an interesting one, and tomorrow it will be today's high, because today we put new lows in across the board, only just on the look at that, the Russell actually having a little bit more relative strength today than the other markets, on the low, holding the lows. But yeah, it's had a real good pullback, hasn't it? So yeah, that's kind of interesting to me. If you've got SharePad, just go into your volume settings and click conviction, and you can see that yourself. I'd recommend a 10-minute if you're just looking at stuff like the markets like this, and I'd recommend a daily, and you could even put a 4-hour on there or something if you're looking at swings in stock. Daily on volume is obviously more important, if you're a swing trader or anything longer than intraday price action. But that's just a really have a look at the high beta stocks. I tried to get filled on one today, just a nibble on docs, and they just wouldn't deal. But you'll see them move. Docs made a fantastic move on that. It's a 3% move on docs compared to the market, what's like 1.5%. So that beta it's got. So that's why I was kind of looking at docs today, and there's another one I was looking at. I'm not going to post. I'm not going to highlight it here because it's a little bit more risky, but it's doing well. It's exactly the same setup. So that's coming in today. Today I've been looking at stocks like this. The real obvious ones. PLTR. This is old news to us really, but it's fair game that it might want to bounce around here. But I'm really looking for this one what's broken out of a base, and I just threw a few stocks over today. What were kind of interesting, and there's another one I've actually taken a position in another one, but I'm not gonna throw it out there now because it's the next opportunity is on the swing points. Basically, what I'm trying to say. So, with that in mind, let's just buzz through these markets. We've been getting stopped out of the bigger trends from the last period, or over the last couple of months, haven't we? And we've just been drifting, and we've been buying some other stocks. And stuff's working, but W7 obviously we got rid of that, and another one for me was TRT. Compounding some big winners, compounding some scratch trades as well. A few small losers, a few small winners. They're actually offsetting each other in my portfolio, which is a good thing. A few paper cuts, but so got lots of cash. I mean, I've got over 50% of the port. I think I'm about 48% invested, maybe a bit less. So I've got lots of cash to be looking for some good opportunities coming up. So I'll just buzz through it. Transports sat in the 50 month. That's one of the big gun averages. When the transports is on the 50 month, I mean, the industrials on the 10 month, which is equivalent to the 200 day. I suppose I have to do the old, because I've shared this public, I have to do the old. Everyone says below the 200 days is bearish. Let's just go and, it's not, moving averages just don't work like that. People use them like that, don't get me wrong, but the S&P being under the 200-day moving average does not mean that the S&P is actually heading south. It just means it's in a pullback. When the 200-day rolls over and is falling, that means the S&P is falling over the last 200 days. So that is in a 200-day falling trend then. So if it's below the 200-day, but the 200 days rising, the trend is still up. These things take a while to turn around. So, I'm just going to show you this sort of action here, down to the 200-day, 200-day, 200-day. 200-day had a horrible, pullback in that area, didn't it? 200-day rolled back over again. 200-day. Every one of these I've just showed you went back to highs. So that's what I'm trying to get at. Let's just do that again. It's one of the things what really grinds my gears when you see the people post under the 200 days bearish. So we do it again. I mean, this was a terrible market. In 2011, it went under the 200-day lower high, and then look at the volatility there. That was absolutely awful. If you think you've seen volatility and you've been trading, started trading after 2011, you haven't seen volatility. That was just absolute carnage. Even it was worse than the pandemic. At least the pandemic just went down in big steps. It was what followed what was the absolute. This is what followed. It was awful. So I was just going to go back and do the same thing, wasn't I? well, do it yourself. Do the old back test. You know, yeah. Sometimes it's horrible. 200 day, 200 day, 200 day, 200 day, 200 day. All these opportunities went back to highs. And then we got that. We This is when you've got to look at it. When it comes to the 200 day, lower high and then rolls over. This one here was a bit more realistic. Roll, and you get that horrible market. So if it doesn't regain highs after a visit to a 200 day, you're going to see a little bit of carnage. It's not 100% rule, it's, well, it is, if it doesn't get back to 200 to new highs after touching the 200 day, usually you get a bear leg. What follows is what I'm trying to say. That is the that is the fact, isn't it? That's fact. I'll just show you that again. Comes down to the 200 day, doesn't go back to highs, bounces again, doesn't go back to highs, and then you have to sit through a bear leg. That's what we're trying to get at here. So it's not now you need to worry about. It's the getting sucked back in it below the highs and it rolling over. So in my world, the best stocks from the pullbacks and pullbacks to what I've just shown you, gapped up for a reason, pulling back into a slingshot area, or stocks what are coiling, ready to break out. Even if the market, if you was buying a stock like this while the market was here and it was breaking out, the stock could get you could trail that stock to half stop to possibly break even at some point before this, if this happened, before the worst case happened. The best case, it goes back to highs, it just consolidates, and your stocks, what you take, they stay on the journey and don't test you. So it's really hard. What I do here is a trading basis. It's extremely difficult because when I post the most useful stuff, it's usually when people are hiding behind the sofa or doing whatever they do, and just avoiding the markets. So it's really hard to get across the most important stuff, the most useful stuff. So that's my little 2 pence on the markets. First correction we've had since the US really started rallying. Europe is extremely strong. It's just the large caps. I actually posted. Should I bring that over as well? Let me just find my market technicals page. Bring this over as well. So we had a zone alarm on my my index model today, and it doesn't mean the bottom's in when I get a zone alarm, but it does mean it's the first time we think there's it's across the board. These markets are pulling into sort of the most bullish markets have pulled into a slingshot area, and we got this today on the back of last night's closes. So you can see that the big three, Europe, are fully bullish. The DAX, the FTSE 100, the CAC 40. Top of the risk fountain. Global companies. As soon as you go lower down, obviously the AIM market where we do all our fishing, or most of our fishing for the higher growth stuff. Yeah, it's not been an uptrend, it's been down. We've traded all those periods. We've traded 40 odd months now. The AIM's been in a downtrend, but we've managed to execute. So the fully listed small caps are kind of mixed on the secondary, and there's quite a few of these just flicking into the bearish trend. 250 as well, mid caps. So it's an interesting area. You know, as we know, if it fails, there's more likely to be a what we call a dead cat bounce. You know, it'll bounce and then it will roll over. But here's the key: if you're looking for beaten up stocks on sale, you know, it's going to be a volatile journey. But if you're just looking for really structurally 100% bullish stocks with a reason to trend, you know, your fundamental reason, gas in the tank, as I always say, the best growth stocks, you know, and the trend is intact. They've just probably had a bad day today, a lot of them. Those are the ones, you know, a dead cat bounce might earn you sort of a lot of volatility and a little bit of profit, but, you know, a true market leader with a reason to sort of trend, you know, that might give you very low volatility to the downside, you know, because it's you know, it might be just going sideways as the market pulls in, so you get low volatility but high reward. And is there a way I can show you that? You know, I mean, I could just go, let's just go to Nvidia, you know, because we'll just go back to the Shescope is running extremely slow today. I've got too much running in the background, maybe. Keep promising to buy a new computer to speed these jobs up, but it'll get there in a second, hopefully. There we go. So we'll just go back to, you know, this kind of action. Say the market, you know, the market against this, say the market's doing that, but the stock's doing this. This is what I'm trying to tell you, trying to explain to you, not tell you. So either pullbacks to this kind of action. So a stock, you know, say the stock's gone up it like this and it's sat here as the markets are all the way down here. Or, you know, the market's down here, but the stock's still bubbling around. You know, it's within 5% of all-time highs and it's getting ready to break out. It's got nice coiling action. I should have showed you the stage 2 on Nvidia, actually, this one here. You know, this makes more sense. If you can find a stock like this, or a stock what's pulling back into a base like this, or gapped up and pulling back into the previous what was resistance, in this market environment where the markets across the board in pullback areas on their ass, you know, corrections have been posted today, just shy of maybe on the Dow, but I'm pretty sure the S&P 500 has posted about 10% off highs. You know, they're going to be your sort of corky potential new market leaders, aren't they? Keep it simple, you know. You don't have to go looking for volatility. You know, you should be doing the opposite, actually, looking for the ones what aren't volatile and holding strength. So just so with that in mind, I will just quickly jump into my screens. I'll just have a look at a couple of markets as well, because we like to have a look around. This Bitcoin ETF is bouncing today. Obviously, you know, Bitcoin all the way back into prior breakout areas. We had a swing point and it's failed already, hasn't it? But all the way back in. I've done stuff on this before, you know. Inefficient, high growth, you know, real inefficient walk to the beat of its own drum. The more expensive it gets, the more efficient it gets. So, you know, we're at the efficient end of Bitcoin now. Everyone can trade it now. It's easy to trade. Breakout, pull, you know, rinse and repeat, as we always say. From this, I'll just quickly go and have a look at gold, because gold's still hanging in there. It's having an okay day today, actually. It's right up at highs, consolidating. it made a huge move. And gold stocks, some of them kind of, I mean, we've been riding the gold stocks for mid 23, something like that. I can't remember now, but you know, there's a whole batch of really good gold stocks, especially the UK ones. And yeah, they didn't take, they kind of went to sleep for a while, didn't they? They went to sleep, and it looks like a few of them are trying again now. But they're still in the game, you know. They just kind of went to sleep. I don't think any of them have broken trend yet. So we'll see if they pick up again. Moving on from that, we've got a big level in oil here, just teetering on the edge again. TLT is just in the range, isn't it? So I'm just going to buzz through the UK screens. There's only 19 on the closing highs today. There's very little to look at. But, you know, what I've talked about there is one of the most important things, you know, I could teach on a day like today. What to look for, you know, it's when the market's in correction, you get to see everything of interest. And coming out, you know, the days following, you get to see everything, you know. All those stocks will show you their hand. And my GTRS screener as well, it will be doing a real shuffle. Could still, you know, I mean, I'll just go through a few. Beeks is still up there in the small cap space. SRB, Beeks, AMP. What else is in there? CNC. Yeah, I'm just naming the top few, you know. Let's just quickly go through these. Skin in the game with some of those stocks as well. Yeah, current gold there. Some of these gold stocks, what are loss making, are actually starting to sort of pop as well, aren't they? Metals, Freshnillo. Yeah, so the last setup we had it on Fresnillo, it was into the news, so you had to literally take it on the news day, because the setup fired off on the 3rd, and it was into news, so you'd have to be quick. You had time to take that trade. I didn't take that one though. I took a different one on the day. There's only so much gold you can hold. MTI, yeah, that one's doing okay, didn't it? Isn't it? It's yeah. I know I always go on about stuff like this, but stock tips follow price moves. You know, they always do, because people like to click on things, on stocks what are up. So this stock's kind of been in our sort of screens. It broke out here, it pulled back in, and anywhere around here was fair game on a pullback for the pullback entry. Let me just find my little box. Anywhere in this little, what I call mean trend zone, was fair game on this stock. It was a feeble breakout, so a meaningful pullback to mean trend there. Yeah, fair game. Realistically, this little area here was a little bit better. I actually bought it here, just on the breakout. I just like to wait a bit longer sometimes on these stocks, because a lot of them do just do that. So it's working, isn't it? It will pull back on the journey. It won't just go in a straight line. Even if it, you know, if it's going higher, it will still, you know, it will still stair step. There is no on the journey from A to C. it has to go through B. And just buzz through the swing screens as well. I'm just going to have a drink of my coffee. This one's an investment trust. Nothing on it myself, you know. And ALU will be in our end of day dash as well. There was another one on the end of day, wasn't there? If I could just, I post my screens every night, and I do a variety of. I do a whole 4 pages ranked, and then I do the signals as well, filtered signals. So that's obviously ALU. It hits the filtered signals, but as you can see, you know, this is old news to us. Same again, you know what I'm trying to explain to you, get across here. We call this a base with supply, and this is 52-week highs coming down. It punched through 52-week highs. You could have cheated it here actually, and it respected that level, didn't it? It went through 52-week highs immediately. It didn't break out. It just kind of posted and then drifted back in. And you know, breakout traders will be happy there and just sit through that. Pullback traders. The scenario is, you see, if you only buy pullbacks and you can't buy a breakout, you miss the strongest. But yeah, it pulled back anyway, didn't it? And then went on its journey. And then it pulled back again and went on its journey again. So, you know, the zone of interest around here, even if you close your eyes, you know, it's not rocket science, is it? Moving on. Costain. Wait a minute, what else was in that? Oh, it's London Stock Exchange Group. That must be in here somewhere. Yeah, this one's trading. This one's got a new set of numbers in front of it now. I say now, but the numbers will move forward because this is the prelims. I don't know if they've moved forward yet or whether we'll see them move forward anyway. It's up near highs. I just think I don't think the numbers have changed yet. Correct me if I'm wrong. I wasn't looking at them before, you see. HEIT, this is expected to post growth, post turnover. Asset manager. London Stock Exchange Group. Yeah, I mean, same again, broke out, dipped back in straight away, and then went off on its journey, and then did a bit of a pullback here. But yeah, deep pullback now. Just because if I was going to buy a pullback, what hadn't, you know, it's not to a base, I'd be expecting this to build a big new base here or trade sideways. So I'd rather be buying something what's pulling back in on its first pullback in a potential trend. And it's not hard to just put a trend filter under the whole UK market and just go through the whole market and find those as well. You know, we have the beauty of having a screener at my side, but yeah, it's not hard to do. I used to do it that way. I could do it that way tomorrow without any, you know, any hassle whatsoever. So I feel like I've not done something I usually do. But has anyone got anything they want to look at in the room? or on the YouTube. Interesting to see how this market closes. Lots of volume coming there. As you know, tomorrow's another day and it could just drift up again and go on another puke, but certainly is an interesting area. And there's your volume conviction again. Just see this light green day. This just means it closed the stick within the prior range without moving higher. Still on volume. And then we've got some distribution came in after that. A little lesson in volume here. So when you see it selling off on high volume, what you want to see is a narrow range bar on high volume. So drift low volume all morning, distribution, and then it as good as trades at an inside bar on higher volume than this sell down bar. And that means buyers are soaking up all the sell pressure. So the sellers are still, there's a buy for every sell, but that sell pressure has been soaked up. It's been more than soaked up because basically it's closed up. And look at the volume that came in. A lot of contracts changed hands on that narrow bar, and then off it goes, and then you get a consolidation on low volume, and then it picks up again. We're going higher, highest volume of the sequence. And then off it goes, and then you get a really big volume and another big volume, and then it fails. We're still on high volume here. It just fails to take a new high, and you get that light green. And then this one actually closes just inside this bar, so that's why it's just pink rather than red. Distribution, accumulation, a tinge of buying, buy pressure soaking up the sell pressure soaking up the buy pressure. Might be a bit different than anyone's explained volume to you before that one. And I'll go back, I'll just go back again and I'll show you that again. We've got distribution. It was all soaked up again there, but it's a wide range bar rather than a narrow range bar. And then down it comes, low volume. A narrow distribution bar here. And we dipped through the lows, took it out, and it was soaked up again. All the sell pressure is being soaked up by buy pressure in this little tight area. I know everyone always says you want to see a big hammer. Big hammer's fine. A little inside bar on high volume after a big hammer is even better. But then you just see this low volume holds the lows, accumulation, and then straight away you're miles off the reversal. You can use that on a daily as well. Okay, quick check of chat. I can't speak tonight. It's been a long day. Cheers, Jamie. Cheers, Mike. Thanks for sharing the. Not many people about at the moment, but thanks for sharing the things on the X for us. Interesting day. Cheers. As always, I've been doing a bit of work at my site. Go over to tradingbases.co.uk and just have a dig around on that first, in the public area. Totally revamping the sort of members area into a lot more order so people can find their way around. Cheers, Andy. See what tomorrow brings. Cheers all.